JJ the CPA here. Listen, here's the thing. We're going to talk quickly about tax planning. It is so easy. It's much easier than you think. Bottom line is that when you are finished with your prior year tax return, what are those results? That's the first thing to know what to plan for in the current year. If you owe $3,000 for the prior year, assuming all things are equal, you're gonna owe $3,000 for the current year. Now, how do you know if it really is gonna be $3,000? We've had a lot of tax law changes, but depending on when you're listening to this, those are all in play. 2018 is now your base year. What do I mean by base year? Basically what you're looking at here is that what was your income and deductions for the prior year tax return? What is it gonna be for the year that we're in? Follow me. If your income is gonna be $10,000 more in the current year compared to the prior year, here's just rule of thumb. Take a third of it, and that will be the additional tax you're gonna owe come the next April, and you should be prepared for it and save for it. Don't just be shocked and be ready to complain next April, because what you're learning is tax planning is simple in the sense of what was last year's income, what's this year's income? What's the difference times about a third, and now you have a rough idea where you're gonna be at. It's the same thing if you're gonna make $10,000 less. Then your tax will probably be around $3,000 or $3,300 less in the current year if the income is down in this year versus the prior year. Here's the other thing, look at your deductions, right? So if in the prior year, let's say with a business owner, you bought a piece of equipment for $32,000 and you wrote all of it off, then in the current year, you already know you're not gonna buy that equipment again. So your income tax is gonna be affected by not having as many deductions. So in that example, that $32,000 plus deduction that you got in the prior year times a third is about $10,000, which means this: if your deductions are down, then your tax will be up. How much? If there's a difference in deductions of $30,000, take a third of it. We're looking basically at about a $10,000 plus difference in your tax, meaning if you are looking at what you're gonna do for the next year, what was your result? Follow me. Ready? Here, go. I'm gonna bring it together, so focus in right here. If you need to write it down right now, do it. Prior year tax, you owed $3,000. Your deductions are down $30,000. You are gonna then owe $13,000 the next year. All things being equal, you already owed $3,000. $30,000 less in deductions, you know there's a $10,000 difference, you're gonna owe $13,000. Wouldn't you rather owe that now to either save for it, withhold more, or pay an estimated tax payments to offset it? Why? So that you're not stuck with that hickey and you're not stuck with underpayment penalties. Tax planning is easy because look at that, you're just making yourself aware. That's different than tax strategies, which we're gonna talk about. Here's the bottom line. Be aware. And then here's the deal. Please subscribe, I'd appreciate it. And then follow me on all social media, hashtag JJ the CPA. And then one last thing, don't you ever forget, you've never met a CPA quite like me. Well, here's the bottom line. You need to subscribe to my videos, right? I've given you valuable information here. I appreciate you tuning in, but here's what I need you to do. A favor, click subscribe, check out my other videos, and then don't you ever forget, you've never met a CPA quite like me.